Hi guys, today we're going to talk about like how S&P 500 look like from here. Currently it is at 5,918 and YTD if you check it's 0.25% like 14 point up and this is a positive turn. But from 6th January it's touched the 6,012 and there is a degrowth from like 1.5%. There is a fall in the S&P and it's 94 point is down. But how things look like, if you see that the currently the next session going to be like the S&P future is currently down 0.29%. So most of the chance like the next session could be negative in the market. There will be more fall, where the VIX is also shoot up to 18 in S&P 500. So it's all indicating, and it is indicating that the market is going to be in a negative trend. If you see the indicators, like what we can able to understand about the indicators, like how market going to perform and what is the Buffett indicator stating about the market. So market is only 202 total market cap to US GDP when we check this, and it indicate that like what is the current market position. So it looking like it's 202. It is very overvalued. If you see, if you're able to understand this, like on 5 years, if you see the trend line, there was a slight correction in the market in 2023, and this was the right time for the investment. And it was like, if you see this line, it is below this line. So if you see this line also, to GDP to total asset of the Fed and all, if you see it's the bottom was 137 and the bottom was 103, and it shoot to like 207, and here if you see it's 167. So if you see it like it was like 109 to 60%, there is a growth in the market with this valuations part. So valuation, when there will be a slight decrease in the valuations, like suppose 142, if you be here in investing, you could have make more money out of where is today the market is very up. If you 1 year, if you see 1 year also it reaches to 207, is slightly is under 200. Then only if 10 years, if you see 10 years also it have break all the records. Like earlier it was like in 10 years it was 199 and it has reached to one. So market is like in a bubble stage and it's all time high. So my interpretation is that if you're investing, make sure you're putting all your profits and keeping at least 30-40% of cash in your portfolio. And then because anything goes happen like from here, never the market from this. If you see this all-time high, and it's currently going down, and if you see in YTD, it's going little bit slide down, so indicating that there is a correction coming up with the market, or maybe market will be swinging the same, but the valuation part, valuation is too high. If you see the sector wise, which sectors are performing this January, so keep eyes on the health sector, because if you see YTD, this health sector has given a performance of 2%, where if you see a 1 year, the least material and the health has not given any return. So there's more opportunity coming up in the health sector. So which all the stocks are there in the health sector, like these are the stock like United Health, where 2% is there was a growth, and then you can check the ABT about laboratories. So all the stocks were in the health sector. Keep eye on that and do your own research in health sector. Rest, the last session was like these are the sector where IT was not given much return. In YTD, if you see this, these are these three sector not giving any return. So keep not putting your money in these sectors currently. And these are the sector giving energy. Energy, you have like OXY, then you have other like Shell, and then these are the stocks have given return. If you see the last week return, the stock has given a more than 5% return out of that. So I already said, if I'm going to share with you the P ratio of the like what could be the P ratio and what is the right time for the investment. So if you see the 1 year, the P had reached to 30 and started with, if you see a 24, so there's a huge growth in the P ratios, and when the P is very high, it straightway indicate that the market is in a high valuations. With a high P, your return is less. When the P is less, so average P, if you take this point also is like 28 and currently reached to 30 and it's coming down. And if you see the green part, it is a 50-day moving average, already crossed the moving average, and the 100 days is 28, and then 200 is 28, 28.15. So if you're able to see that the little bit YTD, if you see the P is currently reached to 29 and there is a little bit correction in the P. And in 5 years, if you see the P ratios, in 5 years, the P was reached to around 40. There was a big correction. And as I said, 2023, there was a P was below 19, 20. So at this time, this was a very right time for the investment. And currently, again, there is like it's reached to 25 and again back to 22. Again, it's going up. So whenever this happened, like it indicating the market is very high value. I'm showing the P ratio of last 20 years. So if you see the 20 years also, that it is currently, if you take the average as 25 of 20 years, it still is more than the 20 years average of P ratio. So if you're investing in the market, make sure you keep eyes and you do your own study. And P is all time up. So there is, I believe there is a big correction in the market coming up. If I show you this 20 years, the P, if you see the P ratio of 20 years, so it is indicating its all-time high. Is earlier in it went 2022, it was 35. After the COVID, the market was given good return. Then there was a correction, and again it's been to 30. So the correction is coming up. Okay, and the Fed, if the Fed is going to cut the interest rate, definitely is going to impact the market, and the investor is going to sell the stock, book the profit, and then the flow of the money will be less in the market, and there will be a correction in the P ratios. So that's for, and then if you check what's happening in the technical part, if you see the technical part, this is the RSI, average RSI, and already the RSI below than the average RSI is about to intersect here, but it is not very true that it's going to be up in the market or down. Market is a negative mode. If you see from here, from market was from 6,000 has now at 5,900, and this is a box. So the support I can take is 5,918. Suppose if this support is going to break down in some session, definitely market will reach 5,800 and 5,500. If we see the VIX, what's happening in the market, what VIX is telling us. So VIX was like there was a shoot up in the market. VIX is going up and is above the average, like 100 days, 50 days, and 200 days moving average. So it's going up. The when the VIX goes up and it's already intersecting the average RSI. So even it is going up, indicating that the market there is a fall in the market, and VIX might shoot up, go to around currently VIX is at 18, can be reached to 20, 20, 21, 22. So make sure be cautious about the current market. The sessions could be some sessions, initial sessions could be in a negative trend, and then do your own valuations properly. And because VIX is indicating there is a fall in the market. So that's for now. For my prospect, this is really or not. This should investors should wait and watch, and keep eyes on health sectors, and do all your research. The market next move, I think there could be a mixed sentiments. I won't say this market will go to up, but more chances the market going to fall. And the first I can see if you're going to break 5855, it's going to reach at 5,811, and then it's going to be 5,600. So if you see the market is going to fall, is going to then definitely there is a 5% fall in the market. If not going to be stable. So that's for now. Thank you for watching my channel. Do subscribe my channel. Thank you so much.